Okay, sorry for the technical difficulties. Thanks for joining the call, everyone. This is the fourth Perpetual Protocol community call. And yeah, we have a lot of news to share today. Originally, this was supposed to be an all good news call. We were going to be discussing our xDai interface. We will still be discussing this, but after that, we'll move on to what's at the top of everybody's minds these days, which is the flash crash that happened over the weekend. It's a very serious matter, so we'll dive into that deeply. But first, we still like to introduce what's been a very hotly anticipated feature for Perpetual Protocol for the last, basically since we launched on mainnet in December. And that is xDai UI. And the reason this is such a big deal is it basically allows any hardware wallet that's compatible with MetaMask, so that includes Trezor and Ledger, to use Perpetual Protocol. Also, we'll be able to launch Wallet Connect, which we haven't been able to use up to this point. So we'll be looking forward to doing that in the coming days or weeks, as soon as we have a chance to do so. And actually, as a very special guest on this call, because we're dealing with xDai, we have Igor Baranov, who's product and operations manager with xDai. And so we're really excited to have him on. And we'll actually start off with asking Igor a few questions, have a short interview, and then we'll move on to a live demo of our xDai UI interface running on perp.exchange. All right, just a moment. So Igor, thanks a lot for coming on the call.
Hi guys, thanks for having me.
Yeah, it's great to meet you. We've been working with xDai now for several months, and often we're working directly with Igor on a variety of subjects, and he's been extremely helpful. Yeah, just online a lot, really helpful, and always available to work with us on improving Perpetual Protocol and also improving xDai as an ecosystem on the whole. So Igor, if I can ask you a couple of quick questions, we're maybe just start off with, I'm sure a lot of users and definitely myself are curious about how xDai was started and like where did the idea come from and why did xDai start? I'm wondering if you can answer that.
Yeah, sure. Thanks for asking this question. So xDai started as a community project on ETH Berlin hackathon. We were not hackers on this hackathon, but we were sponsors, and we had a sponsors dinner with MakerDAO, Haven, which is now Synthetics, and some other stablecoins, and we had a brainstorming session during some drinks how to make payments and stablecoins usable on Ethereum as it is right now. And during that time, there was congestion on the network, and yeah, that's how this idea started. And we decided to build a concept known as a hard spoon. So when you take a token from one network and move it to another network to get new functionality to this token, right? So let's say DAI was usable as a stable token on Ethereum, but it was not usable as a payment token for microtransactions because high fees and limited capacity in blocks. So we gave to this token a new features. And if you look back into history of DAI, it was one of the first derivatives of DAI. And if you remember, after that, many something DAI tokens started on mainnet, right? So people started to play with all different versions of DAI. Well, unfortunately, it's not many of them left, right? But xDai is still around. So it started as a community project with cooperative consensus, which is known as POA. And in a few years, it's migrated into delegated proof of stake, which is like part of the core Ethereum clients. So when we think about xDai, we should think that this solution is built into like core Ethereum clients. Like we don't support forks of those clients like other scaling solutions. So it's a direct contribution into the clients. Yeah, maybe you have It's actually a very long topic I'm just afraid to take all your time, so I'll try to be brief. Yeah.
No problem. That's great. Thanks for that introduction. I think a special feature of xDai is the xDai token used for paying gas, and definitely gas fees are a major topic on Ethereum these days. So can you tell me a little bit more about like how gas fees are paid on xDai and the role of xDai token?
Yeah, I think that's a very strong concept to have a native token or like main utility token as a stable token, because what we see in Web 2.0, right, in like all SaaS services, we pay for services in stable currencies and not in like shares of DigitalOcean or AWS, right? So we don't pay in volatile assets, right? So this concept is actually not that easy to implement because it's hard to make a native token on the network without having some other token which will facilitate some protocols which will create this token, right? So the easiest way is to bridge it from somewhere. And what is like the difference from xDai to like all other bridge tokens, that the native token of xDai is the native token of xDai is xDai, right? And when you have native token on the blockchain, there are some big advantages of using it. Let's say if you want to get a balance, you just make one JSON RPC query, and you get returns in the very fast, and you don't need to scan or like index previous blocks and transactions to understand a balance, right? Just comparing to ERC 20 transfers, right? So you cannot just that easier get a balance of DAI on mainnet. You have to use some like third-party provider or do some indexing yourself, right? Also, native tokens can be used in light clients. We don't have them much on Ethereum, but at least this is an opportunity that the operations with a stable token can be very lightweight and without having trust assumptions, additional trust assumptions. Yeah, the concept of prioritization, there's a like standard built-in Ethereum concept of auction, like whoever is paying more gas, and it doesn't matter is it denominated in stable token or not, is getting more priority. But also because xDai is a side chain, and there are some other mechanics, like there are some prioritization for essential contracts, like bridges and consensus contracts themselves. Yeah, what we have in plans for the native token is using EIP 1559, which fits perfectly in xDai, and this native token will be burned, right? And the supply which will be resulted in this burn will be used to incentivize validators of the network, right? Which can bring this consensus into a more decentralized state. So yeah, there are many advantages. I think the biggest one is that just to have a network which is running and will run on a stable token as a native token, and just utilize this concept, because that's something that is attractive for many use cases. And we as a broader crypto community should have at least one network, right, with a stable native token. So here is xDai.
Yeah, that's great. Thanks a lot for that. Since we're a little bit short on time today, I'll just go to my last question, which is I'm curious if there are any upcoming developments that you can share regarding xDai. Do you have any major things coming up on the roadmap, or anything you can share with us?
Yeah, for us, the security is one of the most important topic, right? So we extend our bounty programs, and we have the largest bounty program in DeFi space, right, for our bridges, and now we're going to bring it to consensus. And consensus of xDai is we froze the code base, so doing one more audit right now. So that's a big part. We want to keep it secure and safe. We have three main products, right? Consensuses and clients themselves, bridges and Explorer. So our goal is to build the best experience for in all these three fields. With bridges, we plan to return back to subsidized model, right? When when we started with this model, when users breached their assets from mainnet to sidechain, the like breach paid for the transaction. It was not very sustainable because of some abuses and spikes of gas price. But I think right now we figure out the model where this can be subsidized by the protocol itself without the needs of and external funding. This subsidy is working with Perpetual. It's like in the manual mode right now, right? But we plan to have it in automatic mode and just bring it to more assets and to more protocols, right? So this will be a big differentiator between xDai and other scaling solutions because all exit fees from the sidechain will be paid by the protocol itself. Yeah, also we're working on the optimistic breach, which will allow to exit from sidechain, even though like consensus has failed, which is very unlikely. So this model is already published. Several upgrades for our Omni breach, which will support different types of non-fungible tokens. Yeah, and that's it's a long list of improvements that we plan for xDai. But as I said, we want to keep it as close as possible to the core Ethereum clients. We have it supported in 2 clients, right? In Nethermind and in Parity, which is now open Ethereum, and to keep it with the Ethereum roadmap and yeah, just to make it safe and usable for users. Cool. Thank you.
Okay, well, all of that is really great news for Perpetual Protocol. I mean, as a fairly major exchange on xDai, of course, security is a top concern for us. So I'm glad to hear that. And also bridging from Ethereum and other chains like BSC, also a major concern for our users. So yeah, that sounds really great. We're looking forward to all those changes. All right, well, thanks a lot, Igor. It's really been great to have you on the call. As I understand, you'll still be around for a little bit. So welcome to, continue listening to the call. But thanks again for coming. Really appreciate having you here. So yeah, moving along, we will now discuss the topic that's on everyone's, oh no, actually, no, we won't. We'll have a quick xDai demo. Sorry, I forgot about this. I'm so eager to get to the exciting news of the flash crash that everybody wants to hear about. But we'll just do a very quick demo of our xDai interface.
Oh, stop sharing.
Yeah.
Share. Good. I can see it.
All right. Okay, so this is the exchange that everybody knows and loves already, Perpetual Protocol. Right now I'm running in the regular Ethereum mode. So if you look in MetaMask, you'll notice it's in Ethereum mainnet mode. However, this wallet is actually connected to a Trezor hardware wallet. So if I try to make a trade, it will not go through. And so what I need to do is switch to our xDai function, which the first step is to log out. So I'll just log out, and I'll reconnect with my wallet, and I'll choose the Trezor option here. And this will ask me to reconnect the wallet. Now, 2 things will happen. Okay, actually it didn't reload, but it's now telling me that I'm on the wrong network. So I need to switch to the xDai network, which I can do. MetaMask is asking me to do it automatically. I'm just going to say cancel in case that doesn't come up for you. What you can just do is switch using the network menu. If you don't have xDai already connected, what you can do is go to a site called Chainlist. Okay, I don't have it. Oh, shoot. Hold on.
No. Can't see it.
Okay, we are back. Sorry about that. Pressing buttons too quickly. Okay, there's a website called Chainlist. You can go to this website to automatically add the network to MetaMask. If you have any questions about that, welcome to come to our Discord. We're happy to answer any questions about how to use xDai. All right. So I'm still on Ethereum here. I'll switch again to xDai. And this causes the website to detect that we're no longer connected by Ethereum, but we're now connected by xDai. Okay, so here we are. We're now connected via xDai. It looks exactly the same. It works exactly the same way. The only difference being now I'm connected using a hardware wallet. So let's say I wanted to open a trade. Of course, our minimum trade is $1. I'll go long on Ethereum. What the heck? All right, so the first step, of course, is to approve USDC. MetaMask, unfortunately, doesn't really calculate the gas price correctly. On xDai, generally 1 GWei will be sufficient, ensuring a very low.
We can't see the pop-up. Okay, now we see it.
Oh, yeah? Can you see the Trezor window?
Yeah.
So if you're a Trezor user, you're very familiar with this process. Got to enter the PIN. So I'll just confirm that approval. Now the main difference between using the Ethereum interface, the Ethereum interface versus the xDai interface for Perpetual Protocol will be that when you're using xDai, you will need to pay for transactions using the xDai stablecoin for gas. If you don't have any xDai, you can just come to our Discord and ask our mods. Also, the Telegram mods should be able to give out xDai. And Block Scout, which is the block explorer for xDai, also has a faucet, which usually does have some balance. You can go and get a small amount of xDai for making transactions. If you do that, you really got to remember to switch the gas price to 1 GWei, otherwise you'll be using up your gas pretty quickly. All right, so we have confirmed the transaction to approve the USD spend, and now we can make the trade. Basically, a very similar process. Set the gas price to 1 GWei.
The MetaMask pop-up is blocked out.
Okay. All right, so I've approved that on the Trezor. And there we go. I have my amazing $1 trade with the Ethereum long right there. And yeah, it's a simple matter if you want to close it or manage your margin. And don't forget also this very handy custom slippage tolerance. If there's severe price action like we saw on the weekend, you may need to increase this to get your trade in. But at the moment, things are pretty quiet, so that amount of slippage should be fine. Again, MetaMask sort of randomly guesses. I'm not sure how they even guess this, but I always enter 1 GWei for xDai. Transactions always go through at that price. And I'll just confirm on my Trezor. All right, so it's been confirmed. There we go. Trade's done. Okay, so that's basically our very quick demo of our xDai UI. It works pretty much exactly like perp.exchange when you're using Ethereum. The difference being you have to pay for gas yourself, and welcome to come to our Discord to ask for some xDai to pay for gas or for help getting more xDai if you're planning to make a lot of trades. All right, so we'll go back to the slides from before and continue to the part of the program everyone's been waiting for, which is discussion of the flash crash on Sunday, yesterday. Yeah, so it was a very exciting event. Started around 11:30 China time, Taiwan time, which is UTC +8 for the North American time on the East Coast. That would be 11:30 in the evening. So it happened pretty late at night. It was triggered by a dip in Ethereum prices at spot markets, which caused a dip, a corresponding dip on Perpetual Protocol. That dip in turn did trigger some liquidations on highly leveraged large positions. And from that, we had a subsequent cascade of liquidations, taking the price from about 2,300 down to just past 900. So it was maybe 870. And within about a half hour, the crash was halted. So the team was online very quickly from that point, looking for ways to buy as quickly as possible. I think for more details, I'll hand it over to Yinwen if you want to make some comments about the crash.
Yeah, I think that I think it's probably start around 2000, but yeah, it's a big crash. I think one thing that's so of course people have this question why the ETH market. On Perpetual Protocol, ETH market is actually our largest market. Most people own ETH, want to trade ETH. The second thing is that on ETH market, so we have this the team maintains arbitrager across all the market, and I think on the ETH market we actually owns gas. So we have other traders trading against us or with us. So I think that it actually creates some effect once people want to sell. Yeah. So can we go to next? Totally, I think there are 82 wallet affected, and the liquidation is around 5 million. It's yeah, it's the total notional size, so it's not really people. People lost. The total of the loss is 5 million. It's yeah, but yeah. Can you move on to next slide? So I think that the first thing I want to do is there are already lots of discussion on Discord. We try to answer as many as possible, but just want to bring kind of a quick overview, the questions, and then how and what the good cost of it, and also how we are going to respond to this. So I think the first thing, overall, I think people kind of have different, point of view on how it happens. But I want to mention that I think a good cause of it is that we need more traders. That's so Perpetual Protocol has been up and running for 4 months. I think we have good volume. There are people we know, people who don't know trading on here. We are really grateful for them. Trade with us, but to be honest, I think we need more traders. We have this published dashboard that our 7 days active user is around 200 to 300. I think we need maybe double, triple, or even more traders on here, because I think the price actually deep. People see that, but we don't have enough. Actually, people talk about that in Discord, but we don't have enough traders coming in. Actually, you can come in and then take that advantage, but we just don't have enough people doing that. So that's definitely something that we want to kind of have a solution on this. So the first thing is that we have been running on with a personal cap for some time, but the personal cap is trying to limit the kind of try to have cap. We have given caps, so the cap is try to make sure that the trading behavior on the platform is kind of within our control. Not control, but within our expectation. But I think we've been running for some time now. I think that we should raise that there are like actually like some attack factor. I mean, like that both auditor and the team has brought up, and we actually, I mean, like we need to like update certain parts of the system to make sure it doesn't really cause any issue. So that's why we kind of like delay this, but it actually has back, I mean, like back effect on the total trigger or total trading volume on, I mean, like within a short time period. So I think we are going to remove that, I mean, as soon as possible, probably this week. And the second thing is that we used to have liquidity mining rewards like a month or two ago, but it doesn't really have the effect that we want. I think the effect is that we want to have more traders. But right now, like the thing I talk about that we need more traders, I mean, right now. So we want to bring back that program again, and then we want to reward RB chargers or market makers. We don't really have any market maker with us because we kind of like want it more like kind of like decentralized. Don't want to have like, you know, make the market kind of like too centralized. But I think actually maybe at this stage we need help from like traders, like big traders. So that's something we will reach out to people. I mean, like to some like traders, like trying to get help. If we have anything, we will post it on Discord, and then so like the community can make a decision that should we go ahead with it. The second thing is that the better liquidation mechanism. Actually, we have proposals like back in, I think like the early March, I think, or like late February. So partial liquidation and also an Oracle-based margin ratio. These two, I think most of people are questioning that why don't we use like trending price for the liquidation price? Yeah, actually I agree. And then we also, we actually have a patch for this. But to be honest, this is not as easy as you think because the risk just transfer from one to another. I mean, so if we have Oracle-based kind of like, I mean, like we calculate the liquidation price based on Oracle price. Once the Oracle kind of like stop update, Oracle report a wrong number. I'm not saying that trending, we are using trending. I'm not saying that, I mean, trending have been, I mean, working really well for at least during our launch or like until now. But the trending gig, I mean, I stopped twice last year. I mean, it might happen, but once it happened, I mean, all the risk will be on the shoulder of insurance fund. And actually it will wipe out everything on the insurance fund. I think it's just like, we want to check something in the middle. So we have this patch that only trigger it when like some situation happen. So that sounds, but actually we kind of like went back and forth with auditor and also the teams and try to get this to ready. So the audit passed last February. No, actually last Friday. So it's actually just like 2 days away. We are going to deploy it this week. We'll just keep doing, I mean, I keep deploying. I mean, I keep the original schedule, but it's just like very sad. The timing is just like a little bit off. I mean, like, yeah. But anyway, I think that's definitely helped with the situation. The other thing that people brought up is UI slowness. The UI is a little bit complex. I mean, like we building like, I mean, like there are like several evolution. I mean, like we keep adding new features to the UI to the point that I think that this will be too complicated. So, but the slowness, I think that is definitely something we will take a look. But at the same time, I think as a backup, I mean, process, we will open source a front end that's very simple. People can just use it. I mean, like it just have buttons. I mean, like nothing fancy. If you want to modify it, if you want to build another UI, please go ahead, use that. I mean, like that's definitely a backup solution for us. I mean, like I'm not saying that you should build your own UI because you want to trade, but it's just like a backup thing that people can use. And then if you have the needs, you can just use that. We also have another public program. I mean, so they actually have a beta version of iPad stacks, which also include limit order on top of Perpetual Protocol. So it's a full feature DAX. The contract is being audited. I mean, it's actually auditing right now. So once it's complete, I think they can release it and people, I mean, like traders can use it. So that's also other choices we have. Yeah, the next one. Yep, so the other thing is that, like I said before, we have the Bounty program working on the limit order and stop loss orders. It doesn't prevent the flash crash, but it definitely helps the trader manage their own risk. So I think it's definitely something we are very looking for. And the last thing, we want to work with like insurance partner, try to cover the flash crash. This is something that I mean, we want to prevent. I mean, like above. I mean, we try to go. I mean, like we will try to provide like more like updated mechanism, and then try to provide rewards and also work with others. And the last one, insurance is just something that if we can get a quote on the protocols that can do this for us, then we will do that at least for, I mean, the 6 months or like a year, try to make everyone feel safe that, you know, at least we have something covered. So that's just a direction that, I mean, I'm really sorry that this happened. I mean, like this, I mean, definitely shouldn't happen. I mean, we should, I mean, we have been like discussed with like, with the community member a lot of times on like how we can fix this. I mean, like on Discord, on lots of places. Yeah, I think that this is the thing that we need. I mean, like just try. At least I try to. I mean, make every effort that we can do to make it better. But at the same time, I think flash crash is something that really might happen. Once we become more decentralized, it actually has higher chance to happen because, I mean, position actually, I mean, the open interest actually controlled by lots of different parties that, you know, they might sell it or acquire more positions based on their own interests. So, I mean, like, you know, it might, you know, there might be like people, I mean, selling a lot because like they want to cover like the loss from other place or something like that. So it's really hard to, I mean, either on centralized or decentralized change, it's really hard to, I mean, like kind of like 100% like flash crash free, but we will do our best to prevent this. Yeah, the next slide. So I think, I mean, the community had brought this up, and I actually found that someone posted on the governance forum. So if you have any idea, like on the conversation, I mean, the team has, I mean, like put out the efforts on building the protocols, and I mean, like I mean, right now we have finished the V1 mostly all the features. So I mean, like we want more like community participation. So I mean, if you support this, if you don't support it, I mean, like just have a voice. And I mean, like if everyone supports it, we will launch a vote. I mean, I just want to let the community decide that you know, for this and then for all the future events that we can. we will try to at least like explain it. Try to explain it well, and then have everyone like know the problem we are facing now, or like the thing we want to, kind of a decision we want to make. So more like a voting, more like decision that can based on the community feedback. So yeah, I think that's it. Yeah, thanks everyone.
Yeah, thanks a lot for that, Yinwen. Just to recap a little bit, as Yinwen said, we are working. We've been working actually since the first flash crash on a bunch of different measures that we can use to reduce the severity of crashes or reduce the likelihood that they occur, and make liquidations more fair and reduce their impact. So all of these things will be coming out very soon. Like the audit for the liquidation updates actually finished last week, and we'll be putting out those updates this week, which is a bit unfortunate timing. But yeah, that's how it ended up. And so it's still critical to understand that, everything we do to prevent a flash crash, we're doing it in the hopes that we can prevent flash crashes as much as possible. But in leverage trading, there's really no guarantee that flash crashes will be prevented 100%. So if you're trading on Perpetual Protocol, you have to keep this in mind, that flash crashes are something that can happen, and it will most likely happen again. But the team and the entire community, of course, is always doing everything we can to think of ways to prevent it and think of ways to mitigate the effects when it does happen. And we'll continue to do that going forward. And as always, we love to hear from the community. If you have ideas about how to mitigate flash crashes or how to reduce the chances of them happening, of course, we're glad to hear it. And yeah, we welcome any feedback you have on that regard. So at this point, we'll go over to the Q&A portion. And if you have any questions, feel free to put it in the YouTube chat and we will answer. Keep in mind that there's a bit of a delay in the YouTube video. So it might take like a few extra seconds for us to answer your question, but we'll do our best to get to them all. All right, so we actually have a question already from a longtime community member, Daniel. He says, hey, Yinwen, how is the research of shifting from the simple XYK curve going? So it's a little bit off topic, but maybe while we're waiting for other questions, Yinwen, you can shed some light on this subject.
It's actually a big, design space. So, so some background for the research. We have, the Perpetual Protocol V1. I think we actually detailed this like in the third community core, the second one. So we have this long-short skew issue. Long-short skew issue means that when the price goes up a lot or down a lot, we actually have more longs than shorts. The design of the protocol is that the protocol doesn't participate in the market, which means that we don't have market risk. That's a really good thing. But it actually participates in funding payment. So because the price actually, the long is more than shorts, or the shorts is more than longs by a certain range, then the funding payment becomes larger. And then it actually creates risk to the protocols. Yeah, we actually have several proposals to combat this. So right now we are evaluating like three, proposals. Daniel, if you're interested, I can actually kind of like, go into detail with you. But I just want to give you kind of a broad explanation. So the first one is that we can create another type of investment, a little bit like bond, but it's not bond. So people who purchase, people can purchase this kind of like bonds, like financial instrument at certain points of time when the funding payment is off. They can purchase it, they can sell it only when the funding payment is off. Why we want to have this is that you actually have very strict like open and close position, timing. But the good thing is that we want they don't have to pay or receive the funding payment. By doing this, actually, we remove like parts of the open interest from the protocol that don't pay or receive funding payment, which means that the funding payment will be more in control. So that's the first thing. The second thing is that we take out some of the position from the curve and then make sure it doesn't affect everyone. This is a little bit harder. We have a way, but it's not perfect. So, still like researching that. The third one is that it's a bit also complicated. I mean, like we want to adapt different kinds of curve that you have like good thing, or I mean, pros and cons. The good thing is that the new curve, we can probably have like, we can concentrate the liquidity. That's a good thing. We can, I mean, like we can do a sort of different adjustment. The cons is that we need LP at that time. So I mean, like it's just like three different choices we have. I mean, like we are exploring more. Yeah. So happy to share any detail. If you want to know like details, I mean, like just guess you can post it on Discord or like I mean, contact me.
All right, thanks a lot for that. We have another question. Actually, was answered. Asked a little bit earlier by, I believe it's probably pronounced Alejo. And he's basically asking about how we can increase the reliability of the perp.exchange interface. On the day of the flash crash, a lot of people had trouble making trades. And yeah, Yenwan, do you want to mention anything about any solutions we have for that?
Yes, yeah, that's a good question. I think, yeah, we take the blame of that. We actually have, I mean, like, we have this problem when we launch, I think. I mean, like when the market is really hot, I think we have like the website becomes slower. I think we actually spend some time fixing that, but you still have like some issues when the market is really hot, like yesterday. And also we are running like more market right now. So we have more, I mean, like 12 to 13. So you also have an impact. So the team is already take a look at this. I mean, like we'll fix it. I mean, from the team. The second thing is that there are, I mean, lots of like, I mean, like denied transactions. So transaction got revert because of slippage, because the price moving too fast, too many people, I mean, are trying to put in trades. I think that it's a little bit complex. I mean, like we use make a transaction, try to, I mean, like have people placing trades using their ETH wallet. You don't need to switch to xDai. But it has this drawback that we kind of like send the transaction for you is by Economy, which is a third party like API provider. But yeah, I mean, we don't have like a lot of clarity on like how the transaction is revert, why it's revert. I think it actually, it's the second thing that the team is looking at right now. We want to, I mean, like to see if we can provide more like details on like why it reverts and also try to fix it. This is definitely the top priority for our front-end team. The third thing is that I mentioned in the slides that we want to open source a very simplified version that it's not like it's not like free, just like so complicated like what we have right now. So kind of like as a backup solution that you can use it, you can build on it, you can, I mean, we just want to like, I think, of course we will, fix it. But I mean, I think the traders shouldn't depend on us. I mean, this is like, I mean, like the community should, I mean, we will issue more bounty on this. We will try to kind of decentralize this. So that's actually the goal. So yeah, so I think that's how we respond to this.
Okay, thanks a lot for that. We have another quick question, which is a little bit off topic. Maybe I'll just answer quickly. The question is, can you explain why my leverage decreases or liquidation price increases as the coin price increases? And I think there's actually a small issue in the UI right now, which we are fixing. So that should be fixed pretty soon. I don't know if you want to add anything on that, or we can just move to the next question.
Yeah, that's it. Yeah.
All right. So another question from Fusion is, do you think transaction mining would be another way to help solve flash crashes? So he says that it essentially incentivizes liquidity.
Yes. Yeah. Yes, it helps. So yeah, I mentioned that yeah, we should bring this back. The previous one, I mean, like we don't think it meet our target, but right now it's for different reasons. So we probably need to change the mechanism a little bit. I mean, work with the team and also the community that try to figure out a way that the problem is that most of the high frequency traders, when the market crash, they kind of like step away, right? They just stay by the sideline and and then see if the crash stopped and then they come in, right? So we need to find a kind of a rule to make sure that they can help us, not just step aside. So that's something we want to update the rules, but definitely something we will consider. The second part of the question is DYDX approach. So DYDX, they have their own Oracle. So they run their own Oracle. They don't use Chainlink, I think. Is that a V1 or V2? I actually forget. Maybe V2 they changed. But anyway, so they use Oracle pies to liquidate the positions. I think let me put it this way, that this is a way to do this. I think we have a patch that we will do this, but DYDX survived yesterday doesn't mean that it's perfect. Why I'm saying that is that I mentioned that in the beginning that we have more, we actually have more traders participate in the ETH market right now, but not enough. But we have more. So open interest owned by different traders. The whales sell, the price goes down. We can definitely use index price as liquidation price, but there are actually some consequence on this. The first thing that the first thing, okay, there might be an attack because because the market price goes down, but the index price scale. So for example, a whale sell and then the price drop 20%. And in this case, actually, you can close your position, your long position that won't be liquidated. And then actually, the first thing you open a short position and then you close your long position that are protected by the index price. In this way, because you close your long position, the price goes down and then you actually profit from the short position. That's one attack that, just a simple one. We actually go through different scenarios and it's not really that easy. I think the second thing is that once the Oracle stop function, so Chainlink, I mentioned that Chainlink have been working pretty well. Since we use it, but they did stop working twice last year. So once is in March when the big crash happened. The second one, I think in April or somewhere. I don't remember why it happened, but it happened. Once it happened, actually the market price might be the right price, and then the index price is the wrong price, then we actually shift all and once it go back to normal, we will liquidate all the positions that should have been liquidated long ago. Then there will be a lot of bad debt occurred on the insurance fund. It probably wipe out the insurance fund. That's also a risk. But I'm not against using, like index price. We have a new I think document in Medium that we only use that when the price give away too much. But I just want to let everyone here knows that I understand that using index price sounds a quick fix to this, but actually it's not that simple. Scale, some central exchange use both of them, some use like one of them. Some use actually market price only. So, it depends. It's just like the risk factor is different. Yeah. That's a long answer. Yeah.
All right. We have another question from Chris, who is disappointed with our response to the flash crash. We're sorry to hear that, Chris. Maybe, if you have some advice about like what kind of response you'd like us to make. Anyway, his question is, Perp's XYK curve seems systemically linked to the flash crash behavior and making Perp a poor venue in all volatile markets. I would sort of say I don't really agree, since we have 13 markets right now, and during, there's a lot of volatility over the weekend, and only one of the markets had an issue. So it seems like, if there's a lot of open interest with highly leveraged positions, then that market could be at risk. I don't know if, but the other markets seem to fare pretty okay. I don't know if when you want to make some more comments about that.
I think I probably need more like okay. So I think I also not agree with this. I think what Chris say is that because this is AM, so people sell, the price goes down, and then it kind of like further the crash. I think that's kind of like a one way to look at this, but on the overbook model, it's the same. Like Binance, they got this flash crash on red market as well. The price goes from like $1 to like 0.15 or something. But they actually implement most of the things that we are talking about here. Like using this price, they use a lot of measures try to prevent this. But the order book got wiped out. Order book has this problem that a big sell order might wipe out everything. But I'm not saying that it's it's like that AM is better. I think there's a risk of step kind of like a step behind. The leverage. If we do leverage trading, people got liquidate. That's how. That's at least like how Perpetual Protocol on central exchange and us implement. I think that when the market crash, people are going to sell. Either way, I think people. The crash scale might happen. Because people want to get off it. One way to prevent this is that we don't let people sell like BitMax. They just shut down the server last year. That's definitely one way to do, but we cannot do that. Just think about this. People want to sell, and the price. If the consensus is that I'm going to leave the market right now, then it will crash. I don't really think that. I want to implement everything that we can do. I mean, as a software engineer, try to prevent this. But I mean, I mean, personally, I think it's not like 100. I don't think anyone can do it like 100%. I mean, risk free. I think that's it. Yeah. That is really hard.
Okay, we actually have a couple other questions. We're just waiting here for the. All right. Actually, the next question is the xDai network transactions per second able to support bot or high frequency trader growth on Perpetual Protocol?
Right now, I don't have an update number on this, but we use probably like 30 to 40% of the bandwidth on xDai around there. I don't quite remember. But at least right now, we don't see a major issue on xDai. But at the same time, we have this concern that the ecosystem the DeFi ecosystem might move to other chain. And we want to work with other chain. I think that's actually other protocols. I think that's actually the reason that the criteria that we are trying to make a decision that should we move or should we have launch on second chain or not. But right now we don't have this plan yet. I think all the focus of the team right now, of course, is fixing this. Try to, execute it well. Try to make sure that everything implement as we decide. But I think before this weekend, actually, we are working on a V2. So most of our focus is working on V2 right now, trying to solve the long short skew issue. Yeah.
All right. The next question we have is actually a pretty interesting one. It says, is there any interest from Perp to develop a stable coin using delta neutral backed future portfolio for collateral for the stablecoin? And actually, we've had this idea proposed. I forget if it was by a team member or a community member, and it is a very interesting idea. If we wanted to do this, it would definitely be a kind of a long-term plan. Our current focus right now, as Yenwan mentioned, is really perfecting the product that we have right now, making Perpetual Protocol a great place to trade, and also working on V2, looking at the sort of immediate future of the protocol itself. So something like a stablecoin, there's a lot of competition in the stablecoin space, so we might just watch for a little while to see how that shakes out. And but long term, definitely this kind of idea is quite interesting if the volume on Perpetual Protocol, grew to an extent that would support stablecoin built in this way. So that's a pretty cool idea. All right, we'll just see if we have any other questions.
Yeah, one thing I want to add is that if any of you are interested in building one, please do contact us. We have bounty for try to for anyone who wants to build on top of Perpetual Protocol. A stablecoin of course, this is a really good idea. We actually spend some time talk about this. The other thing that actually we can do is kind of like a basic trading. So people, it actually the same concept. So you have a loan and then you short it on, you have a loan position elsewhere and then you short it on Perpetual, and you can do basic trading or you can do funding. Funding rate arbitrage. That's also kind of like the same. I'm just saying that this kind of yield farming protocols that is also something that we really want to see happen, but the bandwidth of the team, we just don't have that bandwidth. So welcome anyone who want to join us and build it. Yeah.
All right, it looks like for the moment we have no further questions. Of course, we always welcome any questions and discussion in our Discord as well as on Telegram. Although I have to say the team spends a lot more time on Discord. We do our best to answer on Telegram as well, but if you want to talk to the team directly, I really recommend coming to Discord if possible. Yeah, so I think we'll wrap it up for today. Thanks a lot, everybody, for coming on the call. We will be releasing a blog post via our Medium regarding this flash crash with a few more updates and like sort of more concrete information about the measures that we'll be putting in place in the next, well, basically this week and in the coming weeks. Also, we really encourage everybody to go to gov.perp.fi to discuss in the governance forum about the community proposal that's been put on there regarding compensation for users affected by the flash crash on the weekend. So if you have any, thoughts about that, if you have an interest in that, definitely go and make your opinion known on the discussion and engage in the discussion on there. We really welcome that. And like we say, really this is up to the community. Like if the community feels that people should be compensated, then we're absolutely behind that. But it's really up to the community, and we'll hold a vote when it if and when that's something the community wants to do. Yeah, we really appreciate all of our community members, and I think we have a really great community, and we appreciate all your feedback, and we hope that you continue to do so. All right, so we'll wrap it up. Thanks a lot again, and as always, we have our airdrop at the end of the call. So if you want to get a perp airdrop, please put your address into the chat, and we'll drop you some perp in a couple of days. Thanks a lot, and we'll see you next time. Take care.
Bye.